Hello, this is Right Side Trader. Today is July 24th, 2026, and this is my weekly market review where I'm reviewing the S&P 500, that's SPY, on a quarterly chart, monthly chart, weekly chart, and a daily chart. This is all for educational purposes only, no trade recommendation, because as we all know, trading is risky. You can lose money at trading, so please check with your financial advisor. Please check with your significant other and make sure trading is something that is suitable for you. All right, let's go over here and take a quick look at these charts and see what we see. Maximize this quarterly chart. On this quarterly chart, what we see is red. We see red near a top. It hasn't been able to break all-time highs. It hasn't really dropped that much compared to the Nasdaq 100. So the SPY doesn't look as it is in as much trouble as the Nasdaq. That's what I see. All right, but let's go ahead and go down to our monthly chart and see what we see there on this monthly chart. Let me zoom in here a little bit here. So on this monthly chart, though, what we see here, we're seeing that we have almost a bearish harami with those two candles there. And this is supposed to be a confirmation candle. Not in my book, not in my plan. I like to see, again, all based on your trading plan and your trading strategy, trade accordingly. I like to see if it's going to, right, as long as you're fighting in this area and here, there's strategies that, again, the strategy that you should be, no trade recommendation, sell above. That's what I do at this time. Sell, call spreads, calls, whatever you can do to get a little bit of bearish and collect some money while this thing is trying to drop and holding its own right now, until we actually see some reversal in this market. Right now on these quarterly pivots, we are still above pivot. We are still above the 9-10 moving average. So technically we are bullish. We're in a bull market. Bullish, we're just getting a little bit of a pullback, and I can say a little bit of a pullback too, because we're not even really past. I would think that we're not past the 50% point of this, a close below the 50% point of that candle. So everything for me, based on my trading plan and my trading strategy, is still okay. As long as I'm doing things to kind of keep me from having too much of a loss in the account. You're doing strategies and all to collect money while these things are still trying to drop. So that's it. Too much about trading, but that's all I have to say there. But let's go ahead and go down to our weekly chart and see what we see there on this weekly chart. See, and this is why things are really kind of like working out okay. Looking at this weekly picture. On this weekly picture, we can easily see that this market is actually kind of stuck in a range here. We probably got some support, some demand support. It's way down here, but we can see how we have this tail on this particular candle, the tail on this particular candle. So if we get anywhere below the 730, you kind of expect a push, because this was a pretty strong push up before. It's just now it's consolidating, distributing. Who knows what it's doing up here at this top right now? The only thing that we do know and we can see is not going higher. So be careful. That's all I really can say about that. But next week is the last week on these monthly pivots. Let's see what I'm kind of expecting what may happen. We may get a pushback up above pivot and see what happens there. That's the only good thing that I can see actually happening here. Other than that, we're going to be looking at support somewhere down here around the 730 and see what happens there. Because last time it got there, it pushed back up a little bit, and then we ended up capping up the next day and went up a little bit higher the next day, the next week, and the week after that. So again, that's what I see. But that's that. Let's go ahead and go down to our daily noise and wrap this on up. Boom, boom, boom. Daily noise. Zoom in here. This is all that's needed. Too much, really. This daily noise. Big thing on the daily picture. I want to zoom. I like zooming all the way in here where we can see what happened this week. This week, as we can see, it was expiration Friday, last Friday. we got our gap up like we see a lot. I see this a lot. After expiration Friday, sometimes you get a gap up, but it ends up turning red and all. But then the market gapped up, really gapped up again. Because again, remember how candles work. On this red candle here, you open up here, you close down here. On this next candle here, you remember you closed down here that previous day, you open up here. So you ended up gapping up and all. So that was a pretty big move then. And then this market did try to go higher and all this day here. It was inside of this candle, and then somebody pulled the rug out. Again. They end up pulling the rug out on us. And this market ends up gapping way down here. And right now, I'm looking at a bullish Harami in the right location. That's why I can say that I kind of expect that we might, and plus we got a big gap here. This market may end up coming back up into this area and getting back up in this area come next week, and closing somewhere above maybe about 740 and not down there below that 730, getting into that 730 area. But again, we're probably going to still have a hard time getting above, since this market traded in this area for quite some time, getting back above 750. That's what I see. And that's pretty much all I have. This is a Right Side Trader. Hope you guys had a great week. Hope you guys have a great weekend. And I'll talk to you next week. Have a good one. I'm going to end up putting two versions out here. My little half screen that works well for shorts and TikTok. And I also did a full screen version just to see how that works, how people like that. Comment, let me know what you think, which way should I go. I try to say the same thing, but I know I see things a little bit different each time. This is Right Side Trader. Have a good one. Talk to you later. Bye.